We've had a number of big attacks on gas facilities in the Middle East. The war is basically escalating. That's how markets are perceiving it. And a really critical idea that the markets had last week and the start of this week was perhaps Trump will chicken out, that old taco trade. It hasn't happened. And if anything, the escalation of attacks and the continued practical closure of the Strait of Hormuz has left markets now wondering how long is this conflict going to go on for. So economists and market analysts the ABC has spoken to have said simply, it looks like now, as we stand here on Friday, that the war could go beyond what markets are expecting, and that is a problem. What it causes is uncertainty. And of course, the high oil price leads to high petrol prices and higher inflation at a time when Australia in particular was already dealing with inflation above the Reserve Bank's target band. Ultimately, the feeling is that we might end up with higher inflation, higher interest rates and lower economic growth. And the markets don't want that at all.
Australians are exposed to the financial markets through their superannuation, aren't they? So should people be worried?
Well, it's natural to be worried. The consistent message we've had from financial experts is don't panic. But it's very difficult to, especially because some of the investors and those approaching retirement have said to the ABC is that they lost tens of thousands of dollars in the first week of the conflict. So naturally that would be difficult. We're looking at, from the peak of the market on February 28, which is also the start of the war, since then $250 billion has been lost off the market. And even as we go to where today, the market's a little bit wobbly. So we're looking at a 7% fall, and market correction is from peak to trough about 10%. So economists say we are likely in the middle of a market correction. So if you're worried about it, what do you do? Well, obviously you can call up your superannuation fund or go onto an app and switch from maybe what you might perceive as a riskier superannuation fund to a more defensive or balanced superannuation fund, which would mean moving away from things like shares and both locally and overseas and more into something like cash. Of course, this is not financial advice. Always seek professional expertise, professional financial advice before making any big decisions. But the idea is that those with superannuation, especially approaching retirement, can look at what they've got in terms of how the fund is balanced and their exposure to risk, and can make decisions based on what they see and how they feel.
A tricky question to end on then, David. How long can we expect markets to remain volatile?
I was hoping you wouldn't ask that question. Look, I think we can expect it to go on at least for the next few weeks. What analysts are saying is that even if Donald Trump and Benjamin Netanyahu pulled the pin straight away and said everything's over, it would still take days, weeks, if not months to repair the damage that's been done to energy infrastructure in the Middle East. So as far as markets are concerned, an end to uncertainty would be terrific, but a lot of the damage has been done, Roz, so we're expecting volatility to continue.